Hello, guys.
Hi Dale, how are you?
Hi Dale, how are
Hi,
you?
Chris. Hi, Nenad. How are you guys?
Pretty much
Sorry
Everything is
about
fine.
the.
good.
I had no idea you were inviting me to be a guest of yours. That doesn't happen that often.
Yeah,
So
I can imagine.
thanks for adjusting. I've been billing you guys as the dynamic duo. Okay, 1 + 1 = 11. You guys collaborate a lot and have told the community, Chris, you're the E-waiver, and Nenad is a very interesting technician, does a lot of presentations on FX Street. I think I tweeted out your last fib tool that you had on Twitter. So I follow both of these gentlemen, and I'm grateful that they're here today to share some of their ideas. Thanks again, guys, for joining us today.
Thank you, and you are very welcome, Dale, always.
All right, so
Yeah.
here's where we're at. Last week the Fed, and before the Fed, I thought they might sound hawkish because the S&Ps were almost 2,100 instead of 1,900. It seems to me like they're writing strangles. When the market's weak, they talk like doves and sell puts, and then the market rallies back to resistance, and they talk like hawks and sell calls. So where do you think we're at with the dollar? Some of the dollar bulls still think we're going to above par in the Dixie, Chris. Some E-wave counts take it to 102, and just curious what your views are on the dollar here. And it also seems like we have kind of a lack of volatility, just nothing, 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 and then red events. So I'm going to shut up for a while and want you guys to tell me what you're telling your clients and the people that hang out with you during market hours.
You want
Well,
to kick
Chris,
off,
you
Nenad?
can start it, and I will continue
Yeah.
after you finish.
Cool. So let's see. Maybe best if I share my screen at the same time.
Yeah, you know how to do it. It's up there in the left-hand corner. It's a green
Yes.
box with an arrow.
Switch something on my screen here, and we
And
can get
also,
your dollar.
before people start asking for autographed pictures, that is Nenad Kerkez, not Vin Diesel. So I just want to clarify it to our audience that I know you just made a new film recently, Vin. So thanks for taking time out to talk about your second love besides movie
Well, you're
trading.
welcome, yeah. You're not the first one who has been telling me that. Well, it's always nice to know that.
It's
Well,
great
he is
to have
one of my
celebrity
favorite
traders with us. So go ahead, Chris. Why don't you break out your charts and tell us what you're seeing?
Cool. It's visible. You can see it. I think
still
maybe you have
see.
to stop your own screen, maybe perhaps. I think
I'm
I
on
see
your
your screen,
box.
but
There we go. We got it.
yeah,
You're up.
perfect.
Yeah.
Perfect.
Yeah.
Talking about movies, by the way.
You're a 4-hour chart.
Yes.
So yeah.
Perfect.
So we have the Fed and the Euro pukes, and it's recovered all of its losses. What does that mean?
Well, I think it still could be a wave four. From a wave four perspective, it's quite normal to four. So from that point of view, this is still a major resistance spot. I think everyone's probably looking at that level. And if you put maybe a fib from the origin here, if this is one wave still down from this top to this bottom, then it's a 38.2 fib. Very normal for wave four. So anything that stays below this 38.24, I think we could still see one more fall. But
what if we
get a break above,
what if we try and pick off stops above that level? There's at least 1 or 2 buy stops above the high prior to the Fed, don't you think?
Yeah, that's what I was thinking about the pound USD. Actually, there are a lot of tops there as well, and I was thinking that there could be a run up to get those tops and then pull back again maybe and continue to rally up. But euro dollar, I see it happening with the pound. It could happen with the euro. The 50 fib could also be a resistance spot. But in honesty, I think that if I look at the bigger picture here, let's just zoom in or out, I should say, to the daily, and this downside, I'm not sure. I'm not too convinced about the pace it's showing now. We hit the -272 target, and it's looking more and more like an ABC correction like this, more than a 1, 2, 3. I actually have given it kind of like a 50-50 odds, like is it 1, 2, 3 ABC? It's going to depend on that rate, as you said. We didn't get the increase, so I'm leaning now more towards ABC. So ultimately, it could go maybe to this target. I don't see it breaking 107, 104.50 this year.
Okay, that's an interesting call. Okay, because a lot of people are saying that's going to happen. You know, a lot of people in our room were looking at that 108.30 level, and yeah, you have
108.30
fibs.
maybe, yeah.
Yeah, 107.60 was a fib number, wasn't it?
Yes, 107.60 is.
So why don't you think that
107?
we're gonna, maybe, do you think that's not going to happen because the Fed, again, maybe we get a weak NFP number, or the Fed is not going to tighten in December?
Yeah, actually, I was myself one of the people who said it's going to go to parity this year at the beginning of the target, and I actually held on to that target ever since end of October, and now I'm letting go of that because I think it's just taking too. There are a couple of things. I mean, from my point of view, if I look at the monthly chart, this was a great fall, obviously, but we've got already a lot of candles in consolidation. 1, 2, 3, 4, 5, 6, 7th month, not breaking this bottom. And I've did an analysis about that, and once it can't break a bottom, 5, 6 candles, typically you get a bigger correction. And if this is a wave 4 in general, they tend to be quite large. So that's one thing. It's taking too much time. And also on the daily chart, a wave 3. If this is a wave 3, they should be fast. They should be, going
that's
fast
a pearl.
down.
Yeah, that's kind of like when you get a market that breaks down, Chris. And then I want to go to Nenad. You get a market that breaks down, and it gives you 5 days to decide to get in on the breakout or the breakdown. Normally, if a market gives you that much time to think about it, there's something else going on.
Yes, true.
Okay, so that's a pearl, and that's like you give it 5 candles, and if it doesn't move in the continuation move, then you start to suspect it because you've seen this before.
Yeah. So ultimately, I think it's going to be more of a corrective type. Maybe I think personally more like April next year. We'll get the breakdown. Is my guesstimate at the moment. Which of course very long term, so it's people might be wondering, well, that's way down the line. But that's my guesstimate.
Well, it's interesting. I keep hearing April pop up for like a potential high in the stock market, a potential low in the metals. So there's something about this April time frame. I keep hearing it, so you can bet I'll be paying attention in April. Nenad, where's your head at? And I know you use different methods. Maybe you could pull up your charts and tell us what you're focused on going into the NFP this week.
Sure, I will first share my screen. So just confirm that you can see my screen.
Okay. Still have.
It's okay, right?
Got it.
Okay. So first of all, what I think is maybe I changed my opinion in last couple of days because last time when we had an interview with Forex Street, I explained that basically I really don't expect any rate hike prior to 2016. But now on my latest interview, I also stated that there were some Fed members who explicitly want to hike as soon as possible. Now, the thing is, why do they want to do that? Now, in economy, there is a thing which we call Phillips curve. And Phillips curve is basically a theory which says that increased levels of employment will correlate with higher rates of inflation. Now we know that Fed's target is approximately 2% of inflation, and basically now if you read between the lines, they are saying that short-term unemployment, it's unemployment for people who are out of work for, let's say, last 6 months, it's been pretty much good. So maybe they're implying that there can be a rate cut based on a rate hike based on Phillips curve. So unemployment is very good, but the problem now is inflation. So they're thinking probably that because of that inflation will go higher. So they, if you ask me, they can do that, but they're probably afraid of global risk sentiment and China slow down. So basically, they're hesitant. But if you ask me, I think that there can be a possibility, but we should wait definitely to see.
Yeah, because financial market conditions change. China stabilized, and the S&Ps are, you know, they're a few handles away from 1% from new all-time highs. So isn't it a better time if they're going to do it? And I think they're going to use Phillips. You know I'm starting to interview myself. They're going to use Phillips curve for cover, but I really think it's because they have no tools left unless they raise rates.
But they don't have the tools left, indeed.
Yeah. So they want to have some ammo.
Yeah, they need to use quantitative easing for basically for their currency. So you know, it's always like they're printing out the money when they need, and they always cover up with something. So the thing is, let's say short term. I can say short to medium term, but it's more like a short term. We have a lot of confluence here around, as I already said in my latest euro-dollar analysis, which I published on Friday via Forex Street. Basically, I was implying that the 1025 to 1050 was POC, which stands for points of confluence, and we basically saw that the price came in a little bit, it spiked up just a bit above POC, and then it dropped. This is the huge candle, which dropped the price below 10.00. So the thing is, I'm still seeing this as a confluence zone. Now, the thing is that we also see V-shaped reversal here. Now, V-shaped reversal does not necessarily mean that the price will spike to the upside. Now, this can be a start of the right shoulder, which can imply inverted head and shoulders variant 2 type 2, which is a lean head and shoulders here. And basically, now we should watch the price. Here we have also previous swing, which has been very clear to me, because at this place here, this zone here, this is where we had historical buying, and now this is where historical sellers lie. Now these historical sellers are also could be now moment sellers. So basically, I'm looking maybe to short around this region again, or adding to 10.20, because here at this zone, here exactly at H4, we have also very strong confluence. This is 89 EMA, which basically can also serve as a crucial resistance, especially if it produces T89 pattern, which is basically a pin bar rejection of this resistance. One of the examples is here. We have a strong pin bar rejection here, and you can see how the price basically behaved after T89 pattern. So it's always it's always like that. So T89, it's very strong, and especially because it's already in the confluence zone. So this is basically a place to short, not to go long, because here we have near-term sellers, not buyers, right? These were buyers. Now these are sellers. So this is selling spot for me. I won't go long here, whatever it takes. So basically, this is what I'm looking at, and at basically 1.1200 needs to hold for the price to go down to lower levels. My projection is still bearish, but as I say, anything can happen. There is a lot of volatility in the market, especially because we are close to New Year profit taking. So interesting things will happen, but now at this point, we need to be ready to react.
Right, so anything can happen, so this is a good time to have no position on until we get to important technical levels.
Well, yeah, maybe you're right, but still, for a short-term analysis, I think it's not that important. I still think that short-term analysis could suggest that the price will be rejected from the zone, because we want always to trade in the zone. We want to trade outside the zone. This is the zone. POC is the zone where I put my orders in. So basically, we want to trap the price within the zone. And you remember Mark Douglas also explained in his book Trading in the Zone. It's one of it's a very good read, really. So basically, when we trade in the zone, it's always much more secure than we are trading randomly outside of the zone. So this is the zone.
Where's that zone come in again, Nenad?
So this zone comes at the first zone. Okay, first zone is basically my analysis from Friday, it's around about 1.1050. But the second zone, which stands just above this possible neckline resistance, H4 resistance, and 89 EMA, it's around 1.1100 to 1140. So 1100 to 1140. Because we are looking at 4-hour time frame, we need to have a little bit deeper buffer. So it's 1100 to 1140, and the price should be contained below H5. This is weekly pivot point, so it's 12002. So basically, it should stay below this region if we want the price to go down. Now, if this shoots up, especially if we get a T89 above this resistance, then well, we are in bullish territory then. At this point, we are still bearish. It's very clear. Look at previous swing. We are below previous swing. We are having neckline resistance, leaned, potential inverted head and shoulders, which has not been formed yet. We are below H3. We are below H4. And basically, this is zigzag, right? We have a high, we have lower high, then we have basically a higher low, then we have a lower low, then we again have a lower high, then lower low, lower high. Now, lower low should happen around this region for a good zigzag. If you ask me, I'm still
third drive too. The pattern looks incomplete to me. We've had 2 drives. Yeah, maybe there's one more to the downside.
If you're referring to drive, you mean a drive with harmonic patterns, right?
I don't know. I learned it in the 70s before harmonics were popular. It was just a 3-drive formation. You have drive 1 before the Fed. Yeah. I don't know if it's, if harmonic guys would call it a cipher or a bat or a snail.
Yeah, it's basically, no. It's
there are a lot of funny names, aren't there?
You know what, guys? I've been saying this. I've been negative euro pound for a while, since it was in the upper 74s. And when I'm negative euro pound, I don't want to even play the long side of the euro. If I'm going to play dollar reactions, I'll buy the pound for if I'm looking for the dollar to pull back. But I was saying that I thought right around 71 to 70 was going to be an important zone for euro pound. And until that turns, I have a hard time getting constructive the euro or bearish the dollar. I was wondering what your views are. On the weekly, it looks to me like, you talk head and shoulders, Nenad, that we could put in a right shoulder on the weekly euro pound chart around the 70 level. Do you guys follow that pair? Do you guys follow that pair?
Yes, definitely.
I trade it, and I use it for, kind of my trade preferences for between the euro and the pound. I use it directionally. If I'm bearish, I'm selling rallies in euro. If I'm bullish, I'm buying breaks in euro. So there's a nice look. Is that yours, Nenad? So what are you seeing?
Which one? Which chart are you seeing?
I'm seeing euro pound 4 hours. Is that you, Chris?
Well, yes, like guys. I want to share something with you because I have already prepared it for today's webinar. I will show you that right away. It's basically, yes, I'm bearish on euro pound, and I want euro pound to sell, and I will give you my levels. Just a second, when I need to open my PPT, so I will show you. Okay. So yes, I'm following you, but I just want to show you something.
Yeah, appreciate it.
Okay, EURGBP. Okay, this is it. Are you seeing my EURGBP chart?
Yeah.
EURGBP slide, basically.
Yeah, see it. Okay, yeah, so you'd like a rally to sell.
Yeah, I always sell in rallies. I don't want to sell the support.
And your target, what if we go to 71 first? And what if we go there first, though?
Let me.
Okay. Your target prices are kind of my objectives, 71, 70, 50.
Yeah, but the rally is around 70 to 40, only 30 pip stop loss, and I will show you we have a lot of confluence there, really. So look at this region here. Basically, it's a huge rally here. We have 89 EMA, which already bounced from off if we get a historical price. Now look at this. This is T89, which happened here. Look at this T89. Bang, pin bar rejection of 89. And look at this, H5 ultimate resistance, weekly pivot point Camarilla. And we also have historical sellers at this spot. Look at this, previous buyers, and then this is a retest. Okay, breakout, pullback, continuation. So this is ideal place for a confluence. So 70 to 40 to 50 is a confluence point, and I will be looking to short it when it comes there.
Okay, great look. Thank you so much, Nenad.
You're welcome.
Your Elliott views, Chris, kind of line up with that?
Well, I'm not really following that wave all too closely on the euro pound. I do it mostly on the euro dollar pound, dollar yen. But from this perspective, I mean, if I just quickly take a look, it could be a wave for consolidation.
It's okay. Why don't you move on? Why don't you talk about what you're focused on? So we got a euro pound view. I'd be interested in what you're thinking here on U.S. dollar yen. It's been so range bound for so long, and you know it's considered risk on, risk off currency.
Yeah.
So I'd be interested in that view. Nice shirt, Nenad. You are a rock star. All right, so Chris.
Yeah, dollar yen, a very funky little zone there of 300 pips for about, I don't know, 5 months now. It's no 3 months. No, sorry, but anyhow, it's been quite a while indeed. And I did expect that because it was the 5th push. Oh, I thought I was already sharing. Let me hop over here.
So it was easier on Skype.
Yeah, I did expect that because of yeah. So yeah, I did expect that because of the divergence between these tops. So was thinking that on the dollar yen finally after a very good uptrend, right? But
I'm still not seeing your chart.
To me, not surprising that we're seeing a bit of a consolidation. Not yet.
Yeah, I'm still not seeing your chart, Chris, on the yen.
Oh,
did you
okay. Let me fix that. Yeah.
Let's see.
Now it says you are screen sharing. You know, there's this green line at the top. Says you're screen sharing.
I'm still seeing you talk.
Maybe either Nenad or you have to stop the screen sharing.
No, I don't.
Yeah, I've stopped my screen sharing, so I'm seeing myself now.
You. Yeah.
Thank you for your comment, Dale.
No, that's a nice shirt.
Thank you.
I won't show you what I'm wearing there. Okay, so just wait to see your chart. No, we got it, Chris. Okay, that was it. It came up. It popped up and then it disappeared.
That's weird. Now? This is strange. I'm clicking on allow, but
yeah, I don't. It showed up for a minute. I saw. There we go. It's there. All right. So we see the candles now.
Okay, good. Yeah, no, this is a big consolidation zone, and yeah, I was expecting, you know, dollar yen not to continue with the uptrend, although very heavily dependent on what Bank of Japan will do.
Right.
I mean, I think for myself, my own perspective, I want to see it break this top really before I really trust an uptrend continuation. It could break this 121 resistance, but I still see resistance a bit higher. So I'm skeptical about an uptrend. It could always happen, though, if the Bank of Japan really wants it. But otherwise,
I mean, didn't they have their opportunity to make it happen? I've heard people say that the Fed is coordinating with the BOJ and with the ECB, and they may tell Draghi to just be quiet for a while because they are planning on hiking, and they told the BOJ not to do anything, just that we're going to help them, but we're going to raise rates. So if the Fed didn't want to see the yen at 125 in a heartbeat, and doesn't want to see the euro at 104 in a heartbeat, so perhaps the BOJ laid off because they know the Fed's going to move in December. Would that be?
It's yeah. Who knows? It could be definitely true. I mean, from a chart perspective, it's definitely a heavy resistance level here, with a lot of tops in here. So
I thought there might be one more stop hunt above 22.
Yeah.
You have numbers up there? You have some fib numbers like 2.5 or so, Chris?
You got the 122.50 is a quarter level, and
Okay.
you got maybe up to the 78.6 fib, for instance, 123.30. So even a pop up, I definitely see resistance level, even if that 122-ish area breaks. I'm not, enthusiastic longs right away when that happens. Certainly not, indeed. Yeah, I think also the Aussies and Kiwis are interesting. I mean,
Because
Aussie has been in the downtrend.
let's go to the
Sorry.
Aussie because it's interesting. The yen isn't doing better because 10-year yields have been going up pretty good the last few days, and normally that's supportive risk on. U.S. dollar yen would go up, and it's not doing much. But we're interested in your view in Aussie.
No.
And then we'll go to Nenad's view in Aussie, and we'll wrap it up. And you guys could talk about how people could follow you, get involved with you, work with you, etc. Okay?
Yeah, sounds great. Sounds great. No, the AUDUSD, I mean, we've had such a beautiful downtrend, and then recently as well. Now making kind of a bear flag. I think this could be a bit
we're
of a
still seeing the
area.
yen chart. Still looking at the yen chart.
Strange.
So it didn't change.
Sorry about that. Somehow the technology is not on my side today. Let's see if I can change that. And
it's okay.
No
practice makes perfect. I'll have you guys back here all week long. All right, by Friday you'll have it.
Okay. While Chris sorts it out, I will just say a few things about my view about dollar yen. As you know, BOJ aims for 2% inflation target. Now, meanwhile, we also witnessed a dip in Japanese stocks, and as I explained already in my interview, BOJ is not gonna announce fresh round of quantitative easing, which happened. Basically, they didn't announce a fresh round, but still, we have a big risk to Japanese economy, and it's called a weakness in emerging markets. And both weakness in emerging markets and higher U.S. interest rates are basically divergent from BOJ policy. So BOJ definitely needs to counterbalance technical recession and deflationary pressures by raising purchases of exchange rate funds. And they need to increase monetary base, which would be mainly allocated to risk assets and ETFs.
Okay, so that's a bullish. That's a bearish look on the yen, a bullish look on U.S. dollar yen.
Indeed, I'm bullish on dollar yen, as I explained. I can even say that it might bounce to 125.00, maybe around profit, our New Year profit take, whatever. But yes, I am bullish. Now we have a range, but that range it's a bullish range. It's basically buy the dip, sell the rip, but it's still more buy the dip.
Okay, appreciate that view. All right, Chris, you're on the Aussie Daily here.
Great, cool. So yeah, the bear flag. I mean, obviously, sort of for perhaps a rally with a bit maybe on the risky side here, so close to a potential break, but that could be one moment. Or if one is looking for a break of let me go to the 4-hour chart here. A break of these bottoms and this resistance line, and I think that personally a short here for a target at the trend line, and then a kind of a weakness on the right side for a rally, and then a break probably makes the most sense to me. So I'm expecting this on the AUDUSD, resistance down, and then a weakness, and then a break up to that top of that bear flag, and then probably down again. So that's what I think it's pretty interesting on the AUDUSD.
Okay, so it's a nice trading vehicle. A couple of trades, a lot of trades within a range. It looks like. Range trading.
Yeah, indeed. Yes.
Okay. Yes. All right. So why don't you guys describe what you do with your time during the day when you're not in an interview in LAR, and how people could get involved with you and follow your work and participate in your webinars and all of your offerings. Just take it away.
Great, great. Well, we have perfect. Well, yeah, we have got webinars, a couple of them throughout the week. In fact, Ned and I do that one together, in fact, and some of them separate. And we do that at admiralmarkets.com, and you can go to education, click on webinars, and we got a range of setups, recaps, live trading rooms, educational webinars. So we got a nice mix throughout the week, and that's every week. We got a lot of webinars there. So that's one thing we wanted to tell you. If you're interested, please just join the webinar. You can see if you like it and come back. So that's one thing that we wanted to mention. Also, Admiral Markets, why are they doing these webinars? It's just as an educational tool, analytics to make you a better trader. They're a broker, and they won actually the UK MT4 Broker Award in this year. So might be worth taking a look at some of their things, like platform. They have a Supreme Edition, for instance. They got a lot of extra features that help us trade, like calculating the lot size depending on your risk and stop loss and things like that. So that's definitely worth it. We also together have a website, Ned and I myself, where we give away some stuff. We talk about trading there and analyzes, and got indicators that we give away, and webinars as well. So that's maybe a bit complicated name, but elitecurrency.com, and we got all these resources there that you could maybe find interesting.
Thank you for that review. You want to wrap it up, Nenad, and I think that your work is great, and that people I was glad to hear some of your views. You probably saved me some money on what I was thinking prior to talking to you. So you want to wrap it up. You guys are a live example of teamwork. 1 + 1 = 11. It's great to have someone to collaborate and bounce your ideas off of. So why don't you wrap it up? And before you do, I want to thank you guys for taking time to be with us today.
Oh, thank you so much, Dale, for having us.
Thank you as always.
Go ahead, Ben.
It's appreciated. So I will say that basically I really work a lot, and Chris is here with me. He's also we have been working on a HARP method lately. Basically, the HARP method is a unique range bar and Heikin-Ashi method, which has not been seen so far on the internet. And we gave 110% of us to make a good method for trading. So basically, we are working full time, but after our main work day job, which we do with Admiral Markets, of course, then we move on to basically just making our HARP more and more suitable for traders who never traded a forex market before. That's why I have made a lot of live trading videos on live accounts, which can be found at our YouTube channel. So every single trade which I made was basically made on live account, because I want to make a challenge to myself, and that challenge involves turning a $100 account in a 3-stage account. The first is $1,000, next is $5,000, and the third stage is $10,000. It's basically a mid-term to long-term perspective, because I don't gamble. It's easy to say, okay, we can turn that in a couple of days, and you just place your whole margin, and then you're gambling. Yeah. So I want to do that as a professional trader, as institutional trader also, because I also worked as institutional trader, and I want to do that with a low risk, of course. And that is my challenge. That is what I work on. And basically during my day job and all between these analysis, I'm trying to trade the account and get it up first to the first stage. So we will see. It's a bit interesting, because $100 is not much to lose if I lose.
So but what do you trade? Do you trade micro lots with $100?
Yeah, micro lots. Okay. Micro lots.
Yes, because, walk before you run, right?
Yeah, indeed. But I always go basically for at least 20 pips of profit, because I want really to show traders how proper trading should be done, not by over leveraging, not by increasing volume traded, we want to do that as institutions do. The only thing we can learn from institutions is how they trade, and that is what we are trying to teach traders.
Okay, well,
just
aren't institutions very happy to do between 25 and 50% on their equity a year?
Well, as far as I know, because I was working with a UK firm in 2010, and basically it's like it was like 15. The goal was 15% per year. That was the goal of that hedge fund. It was a hedge fund.
Okay.
And basically our risk was 2% per week. So that was how our risk manager told us to do. So overall risk was 2% per week, and the overall goal was approximately 15% per year. So
what's your goal and your challenge? What would you be satisfied with?
Well, I'm always satisfied. Now with $100, of course, I'm satisfied with 5 to 10% per month. But definitely, I've been making a little bit more because, you know, I'm trading 20 different pairs. And I use also correlation matrix, which is an excellent tool with Admiral Market Supreme Edition, which basically is telling me which pairs are moving the same direction, because I don't want to be double exposed and to a currency pair. So I'm okay with $100. It's okay. 5 to 10% is okay. But as soon as I move to $1,000 stage one, then I will move on to 2 to 5% per month. So it will take some time, but it's always better than 2% per year, which banks give you. 2% per year.
Yeah, and it's realistic, Nenad. Thank you for being realistic, because people, you know, they ask me, Dale, can I trade for a living with a $10,000 account? And I say, yes, if you want to live beneath an underpass. And in San Diego, even an underpass is a grand amount. So thank you for sharing a realistic viewpoint, and people are very happy doing 25 to 50% on their money a year, and forget about 4,000% returns, because you're gonna strike out trying to hit home runs.
The ultimate truth in forex market is, as soon as you cross 5% of risk threshold, you are in danger zone. So usually my positions are in between 0.3 and 0.8% of a risk. One position. So basically, I'm not risking more than 2% per day, but it's like 5 positions, right?
Right. Well, great interview, Chris, Nenad. My hope is that pips rain down on you guys and all of your clients during this fall trading season. Hopefully, I get to talk to you before year end. But good hunting to both of you, and appreciate just getting your views and hanging out with you guys for about 30-40 minutes. So thanks again for appearing here on LAR, and I encourage people to go to elitecurrency.com, and you could follow Chris at Chris Svorcik, and Nenad's Twitter handle is at TarantulaFX, and Admiral Markets is their day job. So thank you very much, guys.
Thank you so much, Dale.
Thank you very much. You're very welcome, and looking forward to seeing you again.
Good hunting, my trading warrior brothers, a dynamic duo, Chris Svorcik and Nenad Kerkez, alias Vin Diesel.